I did crypto and forex, and I want to actually show us today video. I want to teach us on something very important, which is actually an advanced trading strategy, which I want everyone to learn. So guys, just a quick one: if you have not subscribed to this channel, do well to subscribe to this channel, and then if you have not clicked the notification bell, try to click the notification bell so that you'll be notified whenever we upload a video such as this. Now I want to teach you quickly on the 3 laws of Wychoff, the Wychoff 3 laws. Now the 3 laws actually take place every time. Now in trading, it takes place every now and then in trading, and that is the reason why I actually said that I'm going to teach us today, so that we are going to learn and then put this into practice. Now the first law of Wyckoff says that the law of demand and supply. Now this is actually a popular law that everybody knows, and this is a law that even in schools they normally teach students the law of demand and supply, because in every market there must be a demand and there must be a supply. Now the first law is the law of supply and demand, or demand supply. The second law is a law of cause and effect. Those in accounting, we know that. And then the third law is a law of effort and result. Now these are the 3 laws that actually move the market. These are the 3 laws that I want to teach you quickly and show you how these laws actually operate. So all you have to do is to follow me on this video as I take you into this journey, and then I know that you will learn a lot. Now thanks so much. Now first is the law of supply and demand. Now I want us to think of something quickly. Think of this market, the forex market, as a shop. Now look at the market. Think of this forex market as a shop. Now if more people come to buy something in a shop, and then you have the shop and you supply onto them what they need, that means that we actually have what we call demand. There's high demand. And now high demand in the forex market brings about what we call the bullish trend. Now look at this market. That means in this market we are now in a bullish world market. It means that we are having more buyers. Look at it. We are having more what? We are having more buyers. We are having more buyers in this market. Why? Because it is moving what? It's moving upward. Now the moment you see a market moving upward, this means that we have more buyers in the market. That means demand. This market is in high demand. Now this is GBP USD. This GBP USD is actually in a high demand. That's why the price is going what? The price is going high. Look at it. It's actually in a high demand. Now let me look for, now look at this. Look at this. This is the same pair, but at this time we could see that it was now selling. Which means that this was in what? Was in a low demand. How? Now just think of it as a market. Now if the shop has too much stock or commodity and nobody wants it or nobody is buying it, the price will definitely what go down. And that is what happened here. The price actually what started going down because there are less people who are concerned about buying this stock, which is the GBP USD. Now with this, now you understand that anytime there is actually a sell, it means that the price of it is in less what is in less demand. Now look at it. So what will you say now when we have this particular one, now look at this horizontal. Now you see we're having this horizontal. This means that people that are buying and selling, their strength is the same. The strength of the people buying and selling is what is the same. We don't have more sellers and we don't have much buyers. Now their strength of the market is the same. That is why it is in a ranging market. You see it is in a ranging market. Now once you understand this, then we are good to go. Now this means that if there is actually a high demand plus a low supply, price will definitely move what bullish. Look at here, you discover that price actually move what bullish when there is high demand and what and low supply. Price move what bullish. But when there is high supply and low demand, now look at it, when there is high supply and low demand, price will what price will go down for a sell. It will be what? It will be bearish. Now imagine everyone suddenly want to buy a pair. You discover that it will definitely go up. You get it? Why? Because it is scarce. It will definitely go up, and then the price of it will also what will also increase. That is just what happens here. That is the first law, the law of supply and demand. Now we are having the second law. Now the second law is the law of cause and effect. The law of cause and effect. Now what is the cause? Now cause has to do with preparation stage. The market is building what energy in the preparation stage. The market what build energy. The market build energy. That is what we call the cause, and the effect is actually the result of the energy that was released after the build up. Now look at it. Now when big players or institutions are accumulating or buying gradually, which is actually the cause, now they create what we call an uptrend. Look at this. Now it means that for every uptrend that you see, is actually what a cause. Why? Because institutions, market makers are what are building something. Market makers and institutions are actually accumulating what contracts. They are accumulating positions. Now you see, when they are buying, they are accumulating it for a sell. That is why I always tell my student that for every corresponding buy, look at this, has been selling. Now before this sell starts, before all this sell start, there was a buy. You see it, there was a buy here. There was a buy. It has been buying until it reaches this point before it began to what sell. You see, massive sell. Now market makers were actually doing what we call cost. They were accumulating contract, buying gradually. You see little candlesticks, they were buying. Look at it, they were buying. Now after that, they have bought so much position, they begin to WhatsApp. It's just like you now buying a commodity, keeping the commodity until when the commodity price becomes high. Once it becomes high, then you begin to sell it, and that is what happens. So Now I want you to think of a spring. When you press it and hold it down, that is the buying. When you press it and hold it down, you are actually giving it a word, a cost. You are giving it a cost. Now that is when you press it and hold it down, you are giving it a cost. You see it. Then the effect is when you release the spring. When you release the spring will definitely bounce, and the bouncing now, it is the sell which will happen. That is a law of cost and effect. The sell that will happen is the effect, because the effect of the spring after being pressed is the bounce. So the bounce now is the effect, which is the sell. That is the law of cause and effect. And the same also happen for the selling. After selling for sometimes, it begin to buy. That is the law of cause and effect. So quickly, let's look at the last law, which is the law of effort versus result. The law of effort versus result. Now effort is actually the volume of how much activities that is happening. That is effort. How much of activities that is happening is the effort. So now people can be making effort of buying. The result will be the price movement, which is how far the price will go. And I want us to think of something quickly. If there is a big effort, that means there is high trading volume but little result. Price does not match. This means that price does not move much. You get it? So it seems someone is actually absorbing the trade. But if you see price moving very much, very fast, it means that there is no hindrances in the movement of price. Now if there is small effort and then you see low volume but big result, it means that there is no opposition, so the price can move freely. But when you see that there is actually much effort and then we have there is much effort, which is high volume, and then we have little result, it means that there is actually resistance in the market. Let me explain this. Now we are actually in an uptrend in this place here. You see here, you see here, you see here, we're actually in an uptrend. Now this law states that for this particular place, there is what we call effort, which is actually the trading volume, but it's discovered that price here is not moving in accordance to the uptrend. You see it's very little candlesticks here. Price is not moving as expected. The same also happened here. Now this is what we call the effort. This is what we call the effort. But now after much effort, see the result here. This large candlesticks, this candlestick, this candlestick. The same happened in these particular places here. Look at these particular places. You see there's actually effort, but it's as if the effort is being absorbed by some traders, which are actually absorbed by the institutional traders and the big boys. So the retail traders are trying their best, but institutional traders are absorbing everything, are absorbing their effort. But later on, when you see that there was an alignment of effort, see what happened here. See what happened. see what happened. There was actually a big move, which is actually the result. Now these are actually the powerful 3 laws of trading. Very powerful 3 laws of trading. Now if you push very hard but the card does not move, someone stronger is pushing it against you. That is just the secret. Someone is absorbing your energy. But if you push slightly and the car moves far, now it means that nobody is stopping you. You get it? Anytime you are moving in direction of the trend, you move what? You move freely. That is why you see this buy is always what? Longer. See this buy here is always longer, because that is the direction of the trend. You move what? Freely. Look at the sell here. When we are selling this sell here, look at here, that is what? That is the effort was made here, and this is the result. You see that there was no hindrances. Look at here too, the sell, there was no hindrance. But if you look at these particular places here, you discover places here like this, you discover that there was actually effort. Look at here, there was actually effort, but the result was what? Was minimal. Now 3 strong laws by Wychoff. The first one is the law of supply and demand, which says that more buyers than sellers, price moves up. More sellers than buyers, price moves down. And then the second law is the law of cause and effect, which says that when there is actually a build-up, this leads to a big move or effect in the market. And then the last one, the third law, is the law of effect and result, which states that for every effort, which is volume, there should be a match of what? Of result, which is the movement of price. If not, something is happening behind the scene which the traders might not be seeing. Look at the result here. Massive result. Look at the result here. Look at the result. Look at this particular result. Look at the particular result. That is it. So thank you for watching this video, guys. Do not forget to subscribe to this channel and click the notification bell so you'll be notified whenever we upload a video such as this. Thank you so much. See you on the next video. Share this video with your family and friends. See you at the top. Have a good day. Thank you for watching this video. Do like, share, comment and subscribe to this channel for more information.